Welcome. Let me just share my link real quick. Send it to my friends. I don't think they're up right now. I think I'm live, unfortunately. So anyways, I hope you guys can see the stream. I think it's visible, probably. I don't know. Is it visible? I think it takes a bit of time to really process stuff coming here, I guess. Anyways, once this is over here, what we're gonna do is I don't think it's gonna appear. Okay, there we go. Gotta make sure I paste this let's reduce the volume. Okay. I'm gonna forward the link to a lot of my friends. 1 second. Okay, yeah. Alright guys, so basically, let's try to backtest, I guess. Okay, so it's a late night stream in a way. I'm just preparing for tomorrow. So tomorrow we have the Forex Factory news events. Sorry. So the Forex Factory news events tomorrow. So you can see there's this is my normal time. So this is during the New York AM session right here. Anyways, let's get back on track. So now I'm backtesting Nasdaq, of course. So you can see that this is a you can see, okay, for instance, this is a sweep right here. So what I look for first is a breakout trade. In other words, this is a sweep, and we're going to use the fair value gap. This fair value gap right here as a test. So for example, like if I select this point, and this is a very unlikely trade because it's too high, but let's see if it plays out. Pretty unlikely because it's too distant. But if we were to target for these equal highs, that would be realistic. That's a 1 to 2.4. Boom. We hit TP right there. So if we go over here, for instance, you can see that this is a bunch of equal highs. So over here, you see that it sweeps liquidity, and then sweeps liquidity again. So it's grabbing a few more stop losses as well. And see there is a fair value gap. And this is a shorting type scenario, where I would use this swing low as my stop loss. And sorry. And then I will use this swing low. Swing high. Oh, in this scenario it would be swing high as my stop loss, swing low as my take profit. Let's see how it plays out. Almost went to stop loss over here. It's okay. We have a 1 to 10. It's gonna take a very long time to hit, but let's see if it's worth it. Boom, TP, just like that. Okay, so what are we looking for next? These lows were liquid swept. So let's look for a sweep. Manipulation, in other words. So we swept liquidity slightly, creating a swing low. Okay, seems like we swept more liquidity from here, as you can see. Ideally, in every single one of these scenarios, what I'm looking for is one thing. And that is basically over here, for every scenario that I've identified, this right here is nothing but a pickup. Okay? Even though it looks like a sweep, right? This needs to be properly breaking a internal term high and then using this internal term high as a support level. This is what should happen if this was really reversing from that point. If this doesn't happen, that means it's continuing. Just a temporary pullback. Simple. It's pretty simple if you think about it. It's pretty easy. Okay. Alright, so you can see that this is a inter-term high. This area. Let's see if this is used as a proper level support. Okay, so we have a fair value gap here. We're forming a... No, this is not a breaker. We're forming a fair value gap over here. So let's use this fair value gap. If we can use this as a entry from this stop loss, swing low, to this swing high. Let's see if we can capture that. Almost went to the stop loss. I think I would probably get out break even. Yeah. I would break even. This is basically gambling with my stop loss at this point. I would break even. I would break even. That type of situation. Right. Because even though it's swept liquidity, it's not really sweeping liquidity. I mean, sure, the thing about this is that even if we do, the thing that you should target for are the closest draws. But the problem with the closest draws is the fact that these don't really give you that much RR. So even if you were targeting this as your low, in that scenario you can in fact make money. For example, like considering that this fair value gap, these were wicked into it. Right. So in entering off this fair value gap at this point, because it's unmitigated, right here, boom. You can in fact make money off this or even this one. Depending on the displacement, we see a lot of displacement here. So it depends on this type of situation. So what do we see here, right? The one thing that we need to realize here is the fact that whenever we see fair value gap, these wicks, the lows, can be used as the stop loss, and this high can be used as the swing high, can be previous draw on liquidity, can be used as a TP level. Actually, it's supposed to be this because this was already formed at this point. So you can see that it went here. So as long as it's not too distant, you can in fact entry. For instance, in this scenario, it would be from here to here. That's a swing low. Sorry, this is the swing low in this scenario, this specific trend. Sorry, let's go for this swing low, swing high. Okay. And then we are already in premium, of course. Or we can still make money off that. So what do we need to look for? A 1 to 2. Unrealistic to 10 scenarios rarely work. It's pretty simple. Okay, so now let's go back and let's look for this. This is a manipulation. This is called a manipulation. So let's wait for price to sweep liquidity. Okay, so we swept liquidity now. We have a clear fair value gap, unmitigated fair value gap. So once we tap into it, as you can see, we're triggered in now. Stop loss right here. And let's go for an unrealistic expectation over here, 3.6. TP. As you guys can see, TP right there. It's pretty simple if you think about it. So if you look for other sweeps in the market, right? The first thing that I'm gonna look for is a sweep. Okay, it's basically a turtle soup, in other words. So I'm gonna look for a market structure shift liquidity sweep right here, and we see a fair value gap, and then we see a breakaway gap right here. So then, of course, price didn't come back towards the fair value gap. So what I'm expecting to do is entry of this breakaway gap towards these towards these highs, probably TP. RR is about 1 to 1.2. But if you wanna, let's see if we can drag it a little higher to this on it's like a 1 and 3. Let's see if that works. Boom. TP. It's pretty simple. Okay, so let's look for other types of liquidity grabs. You see, this is a manipulation right here. A liquidity sweep in other words. So now let's look for, I need to see a proper displacement below this inter-term high. So therefore we know for a fact that this is in fact reversing the whole market's state of delivery, in other words. So the first thing that I'm going to look for is basically the first one that I want to see is this fair value gap. And then fair value gap, and then, so let's say for example, price comes back to, okay, there we go. We got tagged in, and let's use these equal highs as my stop loss, and then use this as my TP. That's like 3.48. Boom, there we go. It's pretty simple. Okay. So, yeah, that's pretty much... Okay, so let's look for manipulation over here as well. So what we see here is basically manipulation over here. So I need to see a candle displace above. There we go. So we don't really see any fair value gap, but the only candle that I really see as a gap would be this point. But it got wicked into over here, so this is basically mitigated at that point, so it's invalid. So basically in that scenario, you cannot really consider that. But if you do entry of, like, say for example, like an order block, right? Like if you expect prices, like if it's like that type of situation, and then you entry off this and then target these, you get a 1 to 5. So that's a pretty good RR, but it's not, you know, it's not really the type of risk that I really want to take, to be honest. But yeah, pretty much. Of course, we're in an extreme supply zone, so of course this is a premium, so you don't want to be looking for highs or buys from here. So the first thing that I want to see here is, for example, like over here, see that these, okay, even if we consider these, right, these lows, this liquidity, once it manipulates this liquidity over here, I need to see a candle close above this inter-term low. Okay, so now we closed above this. So what's the rule that we go for? We see a fair value gap over here, and we have a breakaway gap right here, which means this is basically the point of entry. So you see the price doesn't come down to it, so which means we'll entry off this, and then we'll take profit up. Can we take it all the way up here? Let's see. This is not really a type of trade that I would really take, to be honest, but let's see. Let's see if it plays out. Let's see if it plays out. I would probably close it at this point. Yep. Like somewhere around there, I would close it. Boom. So eventually it does hit TP, but it takes like a significant amount of time to hit this. So it's not really worth the trade, to be honest. But it's okay. So let's look for other spots. So you can see that we have a manipulation over here. It's manipulation leg over here. We have a short-term high. We have a fair value gap below it. So now we see this unmitigated fair value gap get wicked into. We get triggered at this point. So now you want to target this as your stop loss, and maybe these lows as your TP. So you want to see what price does. Eventually, it takes a long time. It's a very low resistance to query run, but it eventually does hit TP. As you can see, it does hit TP. So we got a 1 to almost 1 to 3.5. So that's good. But it takes a significant amount of time once again to hit this. So yeah, it's not really the type of trade that I don't really want to hold like trades over a few days, to be honest, because that's not really the type of person that I am, because like it's a bit ass, to be honest. So yeah, let me just refresh. I think it's bugged out. Let me see if my playlist is okay. Okay, yeah. So let's get back on track. Okay, so we see this is the current waiting time. Let me make sure everything's great. So you see that this is a liquidity sweep. Fair value gap displaces right above. Taps into it. And then uses this 1 to 1.65. See, it got triggered. Boom. It hits TP. It's pretty simple. Now right here you can see that there is a manipulation. Once we see a manipulation and proper displacement below it, what do we look for? This is a fair value gap. Okay, so we have a unmitigated fair value gap. So let's see if price taps into this fair value gap. So now we get entry. Entry off this. Where do we entry towards? This point. Okay, it's a 1 to 3. Boom. There we have it. See that? It happens over and over and over again. We have an accumulation period, we have a manipulation, and what? Distribution. Boom, towards what? TP. Let's look for more confluences. Once again, what do we see here? Accumulation. What? This is probably a bad news folder day, for example. 10th July. We have a manipulation. What do we see next? This is using it as a proper level of resistance. So we're gonna use this fair value gap. Or if it doesn't retrace lower, retrace back, we can even entry on the breakaway gap. Yep, it doesn't retrace. So we're gonna entry maybe around here. We will entry. We target these highs. Oops. These highs is my stop loss, and maybe these lows is my take profit. See. Oh, we hit TP and then we left. But this was an extremely risky trade. What am I looking for here? So the first thing that I'm actually looking for here is a manipulation. And we have a what? Distribution, but then there's a fair value gap. Taps into this fair value gap. Once we tap into this fair value gap, what do we see? And then we take this towards the swing high. So 1 to 2.16. So let's see if it works. I'll probably break even somewhere around here, because it doesn't seem like it's placing above this rejection zone right here. This seems to be a pretty good rejection zone, because it's rejecting to displace above this level right here. This is basically just a very temporary liquidity sweep. Boom. See, that's exact proof. So you want to ideally get out of the trade as soon as you see this type of thing. This is exactly why I want to respect this one, right? 1 to 2 RR. At most, it will be, at most, 1 to 5 RR. Because 1 to 10 scenarios are very unrealistic. This is a 1 to 2, but you get the point. You should also look at the right side. For example, these lows have to be sort of rebalanced if price is to do you know, have a significant rebalance. So you have a rally, base, and rally. So you see that's why price comes down to this range. It needs to balance these and then go higher. So it's always crucial to even look at what's going on the left side if you see any imbalances in price, because this price needs to be balanced back. This is a level of balance. Why? Because we have a rally base rally pattern right here. So in considering this rally base rally in this leg right here, see this is the rally base rally over here, and then considering this, let's look for a buying opportunity. So you see this is the inter-term low at this point. This is the inter-term low. So now once we displace, once we sweep liquidity, that's when I'm trying to take trade. See, now we sweep liquidity. Seems like we're running on liquidity. But at some point, price will rebalance this price. In other words, it will come back up here. Keep in mind, I'm not using any 4-hour confluences with any of these biases. So if we add 4-hour confluences to this bias, then you will have a high probability trade. If you don't know what that is, it's basically top-down analysis. So you're using a 4-hour fair value gap as a point of interest, or a PD array, high time for PD array in other words. So that would be sort of a big boundary as to where price would possibly go and then go lower from. That's what a 4-hour fair value gap is going to be used for. What I'm looking for here is a manipulation. Okay, we manipulate, and now what I'm looking for is, you can see that this is a bit of a rally base rally type situation. So price needs to eventually rebalance these prices because we have a bunch of equal highs over here. So what I'm gonna do, what I'm expecting price to do, is use a fair value gap somewhere higher than the market structure shift or the interterm interterm low. So once we displace above this, that's when I'm planning on using a fair value gap as a support level, or a entry in other words. So we see a fair value gap over here, which is not mitigated until this point. But just because it gets wicked right through doesn't mean it's the end of the world, pretty much. See, we can entry from here, swing low, targeting these swing highs. It's not really good RR, so ideally I would stay out of situations like this. The reason why price is not pushing higher could be because of two reasons. The first reason is because of news. News could be influencing the price not to be driven higher. Or it could be because of macroeconomic events other than news, of course. Like maybe the whole economy was going down on this specific time. Again, that comes under news. So apart from that, we also have one more thing, which is basically using what's the word for it? There's basically no momentum on the market on these specific days. So less volatility, in other words. Could have been bank holidays, whatever. Doesn't really matter, right? So what matters is the fact that we take everything into acknowledgement and account for it. See, over here we have a high swept, and we will see a fair value gap. So you see there's a fair value gap, unmitigated fair value gap, and then taps into with this candle right here. So now I'm expecting price to use this in swing high and target. Let's be realistic, maybe 1 to 2. Not trying to take it too low. See, TP. Just like that. It's pretty simple. But here's the thing, right? Like I said, I have not considered forever whatsoever in this context. So if there was forever, you know, taken into action, you can see there is a fair value gap that's mitigated over here. And that's why this price drives back to this level and uses this forever fair value gap as a support level to retrace higher to. Now the reason for this is because we use this swing low and swing high. Okay, so now let's go back and look for a sweep. So let's see if price retests this level. There's a swing high, swing low, I guess that's our liquidity in other words. So now let's see if it retests this level, or will it continue to run? Seems like it's continuing to run. Yep. So now this was the point where we had the reversal. Seems like we're breaking structure towards the downside. Okay, we have a bunch of breaking structures to the downside. So the whole order flow is basically going towards the what? Downside. But at some point, it's going to break a internal term high, and then use a fair value gap within, below this internal term high, slightly below. After displacing higher, sweep, go through this fair value gap, and then this is what I'm talking about. Go higher, go lower, go higher. What is this? This is manipulation. In other words, a sweep. Okay. And then this is a distribution leg. But then this is a fair value gap, an inefficiency. You want to use an unmitigated inefficiency, in other words, an unmitigated fair value gap from this area. Then you want to use this as a support level to retrace towards whatever the high buy side liquidity draw is. So let's see if we can apply that theory on this specific scenario. Okay, so let's see if we can displace a little higher from the displace a little higher over here. So let me just get rid of this for now. Okay, it seems like we are displacing lower. It's okay. We're sweeping more liquidity, that's fine. But at some point, right, it's gonna have a significant rise. As you can see, we had a market inter-term high broken. Now what we're looking for is this fair value gap. It's unmitigated, which means it's not wicked into, so therefore it's valid. Now let's take this trade from here to all the way to the top. It's a 2.11. Let's see if it's worth it. Seems like it's a bad trade. I'd probably close at break even. The moment it pushes back to my entry level, I just close the trade. Because I know it's not pushing higher. But at that point, I wouldn't have lost any money. Because if I close break even, I don't really lose anything. This is my entry. It comes back, but it refuses to go higher from this level. In other words, this is a rejection zone, which means price is probably not going to push higher, and even if it does, it's going to take a very large amount of time. Okay, let's get this out the way. You see over here, if you look at it in this perspective, you see a manipulation. Right. This buy side liquidity, it's swept. We see the displacement below, and then we see this fair value gap, which is unmitigated until it's wicked into. This wick is basically the one that entries us into the trade. We're going to use this swing high as my stop loss, this as my take profit. Let's see if this works. Boom. TP. Alright, so let's consider this scenario. Right? We close higher, right? We don't see any fair value gaps, but we see a fair value gap here. If price doesn't tap back into this, what I'm expecting to do is use this breakaway gap as a support level. Let's see which scenario we would get. Looks like price tapped us in. Let's go for this. But there's one thing to be aware of. It's not enough risk to reward, so we wouldn't be triggering in the first place. The reason as to why there's not much risk to reward is because of one reason. If you draw the OT from swing high to swing low, you can see that this is slightly above or slightly below equilibrium, which means we're almost at equilibrium. So when you're getting triggered into the trade, you're basically looking to see something that's above 0.5. So if you take that into accountability, that's why this is a very low risk to reward trade. But even if we do consider order flow and reduce our stop loss for a high IRR, we get a 1.25. Let's see if this plays out. We hit TP. Here's the problem, right? Let's go to some random spot. Over here. See if this works. Boom. Liquidity sweep. Proper manipulation, distribution or displacement right below. We have a huge fair value gap. Will we come back to this fair value gap? Or will we use this breakaway gap as my entry? I don't know. You tell me. Looks like we're coming back. Almost. Then we got triggered in. Yep, we got triggered in. And then we're going lower. It's okay. At this point, we have a bit of a problem. We have a low resistance to query run, so I'm assuming this specific day had very volatile news. But let's not make assumptions. So let's go for it. Let's see how it plays out. We got triggered out. Okay. So you see this? This is a very low resistance to query run, which is proving my point. There's a lot of bearish inefficiency over here, which means price is definitely going to rebalance this huge order. Because it needs to rebalance this back. So now they're going to use this level, retest this as another level of support. My mistake. I made something wrong. This is already wicked into, which means this is mitigated. So at this point we disregard this after it's used as a support, fair value gap. Okay, now let's look at a different situation. Let's look at this one. So now let's go here. You can see that this is a manipulation. It breaks through this high, short-term high. Now, let's look at a fair value gap. See, there's a fair value gap right here. This fair value gap has a breakaway gap right here. It doesn't seem like price came back to our level. But if we entry all the way down here, it's not really worth the risk that we're taking here. Boom. Let's look at this in the inverse direction. For instance, we have a manipulation once again. Flip the script. Right? Manipulation. Displacement right above. Fair value gap. Taps into it. Taps into it. Boom. What do we see here? I'm gonna place my order right here at this low, slightly below this. And let's go for these eyes. 2.4. Too much consolidations. Ideally, I would exit out somewhere around here because there's too much low resistance to query runs. See? It's going on for way too long. See? If it goes on for way too long, that means it's basically refusing to close above a specific price range. In this scenario, it's refusing to close around this area right here, which means price is refusing to go higher. What is this indicating? The fact that you can't really go higher than this. It's a rejection zone. Okay. Let's see. This was the previous swing low. So ideally, if you want to look for a proper market structure shift, I would want price to displace above this inter-term low. See? Oops. So now let's use this as an inter-term low. Seems like we went for another draw. But it seems like we're sweeping liquidity here. I'm still not convinced. Okay, what do we see here? You can see that we have a fair value gap that gets mitigated right after. So even if you do entry right here off this swing low, and even if you target this as a take profit, let's see how it plays out. Stop loss. Stopped out. There could be other factors. I'm not trying to blame it on anything, but news and forward bias. That's what we're missing. Because I'm just backtesting, right? So I don't know what's going on that specific day. Could have been a news day. I have no idea. But we will never know that either. So you see, this is a liquidity sweep right here. Once again, we see a liquidity sweep. In other words, an inter-term high broken. It's a very temporary inter-term high broken. See a lot of displacement below. So what you want to do is go for a unmitigated fair value gap. The only unmitigated fair value gap that we see here is this. And we have a breakaway gap right here. So we either entry off this or the breakaway gap. Let's see which one it's gonna be. Doesn't seem like price is coming back to this level. It's okay. We see this. It's short-term low. We close higher. We have a fair value gap. Seems like we swept liquidity. Yep. Well, stops triggered. Which means price is still sweeping for liquidity. When we're making an entry decision, you will also want to look for any unmitigated fair value gaps. In this scenario, this would be invalid because this was wicked into. So you see, this is a sell-side liquid draw. Ideally, I would want price to come back. Ideally, I would want price to displace above this. Doesn't seem like we came up. So let's use this as an inter-term low. Doesn't seem like we swept. See, it was a very temporary sweep. If I want to really take an entry, I want to see proper displacement. and used as a fair value gap somewhere here on this leg right here, somewhere around here, and then you go higher from it. Imagine a fair value gap right here. Yep. Okay, so we see these sweeps. So you see this first sweep, right? Right after it displaces above. There's a fair value gap, which is tapped right after. But because of the, let's say, right here, because of the RR, I wouldn't be entering in the first place. Would I be entering on this? Sorry, this was the other way around. My bad. 0.73. See? 0.73. It's not really worth the trade. So that's the question that you gotta ask yourself. Is it worth taking this trade in the first place? See this manipulation? And we have a fair value gap. Taps back into it. Why do we expect to go higher to? This or this? Let's see. What if we get a proper 1 to 2? Nope, we got stopped out. Simple. There's one thing that we're missing here, right? In this situation, I was missing one thing. That's this. Let's see, once this low is swept, swing low, sell side liquidity in other words. Once it's swept, let's see what it does. Distribution, displacement above. Nope, temporary sweep. Okay, there we go, confident displacement. That's when we have the fair value gap. Boom, taps back. Let's use this. See if we can get a proper 1 to 3. Nope. Stopped out. That was a good 44 minutes of backtesting. I think that was backtesting for around. Damn, that was a good amount. I can't speak. Good amount of time of backtesting. I hope you guys enjoyed this short little stream. So now there's one more thing that I gotta hold up. Let me check if my stream's alright. I think that was backtesting. Okay. So there's one thing that I do need to do, and that is basically learning this thing called order flow. Now order flow is basically when let's say there's three aspects, right? First line of defense, what was it? I keep forgetting which one, because there's few things when it comes to order flow, right? And that's this right here. So you have a first line of defense, overlapping defense, and a last line of defense. Just in case, okay? So this is basically, this happens every single time in every swing. Okay, so let's say for example this one. Okay, you see there's a fair value gap right here, which means price is always going to pull back towards this fair value gap, right, and then go higher. This creates further order flow, and then I would expect another fair value gap to form here. It's called the first line of defense. In other words, I would expect it to pull back and then go higher, creating what? More order flow once another swing is created. Okay, my bad, sorry. Okay, so back to what I was saying. So you can see that this, unless this is created and this fair value gap is created, there is a high likelihood that your trade that you're taking is not really supposed to be going right? Unless there is a fair value gap. So there's two cases when it comes to this. We have What's the second case? It's basically if you don't have a fair value gap, that's basically a low probability trade. Let me show you something. If you want extra details on this, Aju is the best guru ever. Honestly, hands down, the best. The best. For a beginner, probably a little too complicated, but it's probably the best guru out there, honestly. So you see that right here? If there's a fair value gap, right? The idea is that if there's a fair value gap, you can sort of pull back and use this as a reaction level to create order flow. But if there's no fair value gap, like this situation, it's highly likely that you're going to go higher from here. So this tiny fair value gap has a second probability because obviously the fair value gap is smaller in this scenario. So there's a less probability, but there's still a probability of a... Let me show you what I'm talking about. Sorry. Let me show you something. So right here, see this is a proper fair value gap, proper displacement. If you go to like the lower time frame, let's say this is like 4 hour, this whole thing is 4 hour, and then you go to 15 minutes, you see proper displacement candles. But here's the thing, right? This is the situation. Then there's a high likelihood they would hit this, maybe 50% encroachment, then would go lower. But in this type of situation, you still have a likelihood because there's a gap. I wouldn't even call it fair value, but there's a gap. You tap back into it and then you go lower from there. But imagine there was no fair value gap whatsoever, not even a gap. That's this. That's this. Where is it? This one. This is basically, you could call it accumulation, manipulation, distribution. Nah, not really. You know why? There's no fair value gap to really indicate momentum or a pullback. So unless there is no fair value gap percent, it's not really a valid point of entry. Because if there's a fair value gap, that's when you can entry in. If not, there is no likelihood of... if there's no fair value gap, there's no point. Because it's probably just going to do this. It's going to do this, watch. Maybe create a fair value gap here, tap back and go higher. This is just an internal term high. Or intermediate term high, some people call it. Internal is just my terminology. But again, I'm very new to this. Not very new to this, but I still have some doubts about this. See over here? If this fair value gap is not created in the order flow, or order flow is basically just a fair value area, in other words, the way we're going to identify this is by looking at a flow of order. So you see, in a bearish scenario, you see that we have a 1, 2, 3, 1, 2, 3, right? Let's see what it does next. So you see over here, you could consider 1, 2, and 3, and it uses this level. See, almost there. Basically tests this level. Let's just imagine this is sort of wicked into it. It breaks through this level, ultimately guaranteeing that this trend over here is in fact valid, right? But here's the problem. You see, there is a fair value gap here. Even though it taps into it, it goes lower. But imagine a scenario where there was no fair value gap. This was all just wicked into. There's no fair value gap. Then what it's going to do is it's going to form some fair value gap here, like in this kind of area, and then use it, just hypothetically, use it as a level of support to retrace towards whatever the higher buy side liquidity is. Why is this? Inter-term high, broken. Pulls back to one of these. Even if it breaks this, inter-term high, broken. Ideally, I would want to pull back to one of these fair value gaps, unmitigated. In other words, not wicked into. Then go higher. What do we have here? a market make a buy model in that scenario. See? I hope this video stream was great. I don't know if anyone was even here, but if anyone was, thank you guys so much.